Hey everyone, happy Thursday, January 4th. It's about 11:15 on the West Coast and time for another market update. The first market update of 2024, so welcome to 2024. We ended 2023 on a good note and mortgage rates coming down. Basically the name of the game in 2024 will be continuing to see inflation get under control and, basically how hot the job market and our overall economy performs. The hotter the job market, the stronger the economy is, probably the longer we'll see rates elevated, the longer we'll take for the Fed to make their first cuts. But let's get into things, see how 2024 got off to a start. So the first thing we got a couple days ago was the November JOLTS report. So that's the job openings report. So basically, this is a number that we take a close look at because we want to see how many job openings, but it also is very volatile, especially now how they calculate things. There's a lot of double postings across the country with online, multiple states. Sometimes they're posting the same job with different titles to get more responses. So that actually came in under estimates at 8.79. Taking a look, as you can see, pandemic obviously dropped down low. Since then, it been going up, but our overall momentum is, flattening, coming down a little bit. So it'll be interesting to see how that goes upcoming. But keep in mind, this was November, so we don't have December's numbers yet. So this is a little bit of a lag on this report. The next one we got, this is jobs week, so all the job numbers come out, was December's ADP. So this is private payroll. There was 164,000 jobs created, whereas the estimate was only about 130,000. And leisure, once again, popped up. Leisure and hospitality is the main gainer. So, you look at the graphs here, obviously July was really high, but since then it had been, coming down, being nice low numbers for us. But it ticked up this time. And as I said, hospitality and leisure jumped up 59,000 jobs. So, maybe that was more seasonal help as far as, a lot of people like to travel, do things around Christmas. So maybe that, increase was due to a seasonal hiring to deal with that. And then Nella Richardson, the chief economist for the ADP, said we're returning to a labor market that's very much aligned with pre-pandemic hiring. So it's always good to hear that we're getting back to more normal times. And then annual pay increases. This is still elevated, but it's coming down. Job changers during the, about a year or two ago was up to 15-16%. So that's good for inflation, basically. So next thing we got was today we got job claims. That came in low at 202,000, 216,000 was the estimate. Continuing claims rose again. So again, plays into the narrative that employers are holding on to employees as long as possible. But when they do get laid off, employees are having a hard time finding new jobs. And the one thing to keep in mind, it's been the holidays, so you would hope that there's not a lot of Grinches out there, or I'm sorry, Scrooges out there that would lay people off right before Christmas, right before New Year's. So generally, we're going to see lower numbers of layoffs around that time, and also, with the holidays going on, less people applying for unemployment. They're traveling, they're doing things like that. They don't have time to apply for unemployment yet, and all that entails. So, it'll be interesting to see what next week's number is, since this one came in pretty low. And then some miscellaneous stuff. Next thing we got was the Fed minutes. So a couple of weeks ago on December 13th, the Fed had their last meeting, and that was a big one for us. Powell was very dovish in his comments afterwards. So these minutes where we take a look at what they were talking about in their meeting is important to see, if that backs up what they said afterwards. So, the main points here, we had the Fed convinced inflation's coming under control. That's good for us. That's what we want. The 6-month core PCE, which takes out energy and food prices. Remember the Fed wants that to be 2% or so, and the annualized reading for the last 6 months is 1.85%, and the Fed pointed that out. So it's good that they're acknowledging that we're in a good spot right now. They acknowledge the risk of being overly restrictive. So basically they're acknowledging that, hey, if we keep, rates too high for too long, that could hurt the economy. So again, that's a good one for us if we want rate cuts. And then almost all our participants, all the voting members, all the people that go to these meetings indicated the lower FFR. That's the federal fund rate. So basically, their rate it should be appropriate by the end of 2024. So there's different variables there, like how much they think will come down. But basically, all of them thought that there would be rate cuts from where we are now by the end of 2024. And then to cover their bases, they did make note that there's basically a lot of uncertainty out there. So they can't say for sure. They're not promising anything, but everything's looking good, at least on the inflation front, and it's also looks like the economy's been slowing down, so that would play into them having to cut rates sooner rather than later. And then the other thing that's been going on this week that's been having an effect on things is there's more and more turmoil going on in the Middle East with there's some attacks going on in the Red Sea as far as shipping and things like that. And the problem with that is anything that disrupts oil production, anything that disrupts shipping, creates inflation. So we definitely don't want that to continue. So we'll have to keep an eye on that to make sure oil prices don't get out of control over there and affect us here with gas prices and everything. Next thing we got, so the average conventional, 30-year conventional for according to this lender survey, so not what everybody would get, but, a good thing to keep an eye on just to see where things are going. Last week we were at 6.63. Today we're at 6.76. So the ADP today kicked us up. I think we were at 6.67 or 6.7 yesterday. So a little bit higher than last week. Still haven't given up too much of our gains. It'll be nice to get back down below, which leads us to tomorrow. Tomorrow we get the BLS jobs report. Right now, they're thinking about 170,000 jobs created on that report, and the unemployment rate going up from 3.7 to 3.8. So, as always, it'll be really important with that BLS jobs report. That one has really hurt us over this in 2023. That had a lot of the times we saw rates jump quite a bit. That was, basically because of those BLS reports. So, maybe we're in line for a good report this time. So we'll have to keep a close eye on that. That will have a big effect, going forward up until that next Fed meeting, next inflation reports, and so forth. So, fingers crossed that we don't see a really, really high number there and shocks the markets and things retreat a little bit. But otherwise, things are still heading in the right direction. I hope you guys had a great New Year holiday. And if you need anything at all, please don't hesitate to reach out. Have a great day, everybody.